Good morning. Welcome to FOMC day, which I don't know if it means much today, but we always use it as an excuse to move things around and to pickpocket the retail traders. We saw yesterday a really sharp drop from the open. We had a spike down. We came back into the 20-day point of control. At that point, I said in the Discord, we're probably gonna just hang around the whole day here. Because why did I say that? Is because we had this big rally, and then we're pulling back into that 50% retracement into that 20-day point of control. Rollover is still going, so this is a perfect spot if you're rolling over to transact, because this is where most of the volume is. So this is a good spot to do business, right? If you have to adjust positions, roll over from one contract to the other. So this is a good spot to do business. So I thought that we were gonna hang around, and that's what happened. We couldn't get any continuation to the downside. And now we are trading right at that spike, right at the base of that spike. Like trading in the spike is more bullish. I mean, obviously the most bullish scenario would be trading above the spike, but the other two scenarios are trading inside value and below the previous day's range. So this is one of the most bullish scenarios. So holding above the spike likely is going to have us retest the top of the spike, and at that point we're going to be inside value for this day, right? And this day was kind of a multi-distribution, and it has like kind of like a poor value area. So I'm thinking that if we get here, then we could see a sweep through the whole range pretty quickly, and continue the up move and retest of that previous week's high, which we couldn't break the other day. So that's one scenario. Now the other scenario is, so in that scenario, that would be, if you're looking at the longer term distribution, that would be a rejection of this value area. So this value zone, that would be rejecting, and then that's why it would be squeezing higher to attempt to go back into this value area. Now, if we come back inside value and then we sweep through value, we're probably gonna finish what started yesterday, which is a failure to break above value area. Should target the other side of value, which I said yesterday it was 56.30. So that is the scenario in case we start accepting inside yesterday's value. But we spent so much time and volume attempting to move lower yesterday and couldn't, that it's making me a little hesitant to say that we're gonna continue and repair this bearish imbalance. But that's a scenario that we cannot ignore. And we have FOMC, so around afternoon we're gonna slow down and wait for the statement, and then likely we're gonna move during the press conference. Okay, in Q, very similar scenario. Trading around the point of control 680. Yesterday I was short in the morning, and I said we're likely gonna come back into that 680 level, and then that's where we stay most of the day. But similar scenario with a spike. Looks like we want to test the whole spike again. And on the downside, we have that untested point of control at 530, and then we have this big volume area that we still haven't tested. But look how now in comparison, now this level is the one that has most volume. So if we lose this area, then we're likely gonna attempt to retest this 19,290. Then we have crude, which yesterday I said that was resistance, and now we came back all the way down to almost the bottom of that range. So still trading back in this range, still now back in the middle. I mean, if we hold above the overnight session, the target here should be up here, but see how like when we sold off, we left this area where it's gonna be short-term resistance right here. So this we need to trade above this to go back to the 67.50 area. And gold is holding the break with a gap there above 3,000. We're probably gonna fill the gap. Some little pullback during the FOMC maybe. I don't know. We'll see. Before we continue to that 3,100 area. Alright, don't forget to like and subscribe.